Michael Burry is famous from the Big Short movie, which went over how he made a fortune and predicted the housing market crash. Ever since then, investors have kept a close eye on his moves and his predictions for the next stock market crash. He has been quite vocal in recent years about a potential ETF bubble that could pop and result in the next stock market crash, and this is because of the blind amount of inflows into ETF investments, as investors are blindly buying these assets for long-term investments. Well, whether you agree with him or not, what I want to do in this video is cover some recent stocks that he has been buying, which are quite interesting in my opinion. I will also share with you guys my thoughts on each one of these picks, and let's just say I do own a couple of these companies, and a couple of them I would never ever consider owning. So this is gonna be a fun video for you guys. Drop a like down below to show your support for the channel as always, and hit the subscribe button down below if you're brand new here as well. But without further ado guys, let's get into it. So he made a total of 13 purchases through his firm Scion Asset Management. So what I'm gonna do is actually share with you how many shares he picked up of each of these stocks and the dollar value associated to that as well. And just for fun, let's go from the smallest position that he bought to the largest position. So his smallest purchase here was Wynn Resorts, where he picked up 7,700 shares for a total value of $463,000. Wynn is down 67% from its peak in 2014. However, it is one of the premier players when it comes to the casino and gaming space. I personally invested in Wynn during the 2016-2017 timeframe and made about 100% return on the stock before I sold out, but I have not bought shares back into this company since then. I think at these prices, it could still be an appealing long-term hold with a current market cap of around $9 billion. And I think this could be a very good recovery play here because Wynn is a strong brand name in this space. And I do expect this sort of segment of the market to recover over time. This is an investment I've never discussed on the channel before, and he picked up 6,700 shares for a total value of $558,000. This stock is down close to 45% currently, and from its charts you can see this isn't a stock that typically has a lot of volatility. This could be seen as a good opportunity to pick up shares if you like this industry or this business, and quite honestly, it is one I may actually spend more time learning about. Cracker Barrel has a reasonable PE at around 10, a good dividend yield of over 5%, and is a $2 billion company, so this could very well be a good acquisition target as well. Number 3 here is Foot Locker, and it's a stock that's gaining some popularity here on YouTube recently, and Burry bought 100,000 shares of this with a value of $2.2 million. Now because this is a retail player, it naturally got hit extremely hard the last few months, and as a result, the stock is down over 67% from its peaks. However, with this discount, I believe the stock may be a value trap here. It has a low PE of 5, a dividend yield of over 6%. However, this type of business is not one that I personally believe in for the future. Old school retailers like Foot Locker aren't where consumers typically like to shop these days. And after this whole lockdown period, even more consumers have shifted to a direct-to-consumer model and just going to companies like Nike directly, for example. So I'm not really a huge fan of this industry, and I'm not going to be an investor of the stock as well. Number 4 here is Las Vegas Sands, another casino stock, and it's actually the largest player in the space, I believe, and Burry bought 68,500 shares for a value of $2.9 million. Las Vegas Sands stock is down over 66% from its peaks that it hit before the last recession, and it hasn't been able to recover ever since despite a thriving economy for the last decade. This is not a sign of a strong business to me, and if they can't thrive in strong economic times when people have money to spend and waste, how do you expect them to thrive when times get tough? I'm not a believer or a buyer of the stock, but I wish him the best of luck in this casino play. Number 5 is Michael's Company Inc., and it's one I've never really looked into before, and it's not a store that I really shop at either, but Burry went on a shopping spree for shares and picked up 3.25 million shares for a total value of $5.265 million. Michael's stock is down over 90% from its peak, and this company looks like it's on its way out along with many other pure play retail companies. Honestly guys, I don't see a bright future here for this stock or the products that they sell because a lot of it can be purchased online. So this has become less and less of a necessity company where you have to go in store for. And I'm really bearish on this type of company and industry as a whole. So this is an interesting pick here that Burry purchased 350,000 shares of for a total value of $6.8 billion. Discovery stock is down over 54% from its peak, and it has been a fairly stable company in recent years. Being a media company, I can see this as a prime takeover for a media giant like Disney, for example, at some point. And this is quite possible because Disney actually recently purchased 21st Century Fox, and they own brands like National Geographic, so content like Discovery creates would fit into their portfolio nicely. This isn't a business that I can see growing over time, but I can see it as a consistent investment for the foreseeable future. Unfortunately though, there's no dividend income in the meantime if the stock continues moving sideways, and I will not be investing in this stock. I would much rather go directly to the biggest player here, which is Disney. Another beaten down retailer, Tailored Brands, makes the list, and Burry purchased 4 million shares for a total of $6.96 million. This stock is something I would stay far, far away from. It's down 98% and is pretty much in penny stock territory right now. The business as a whole is another company in the retail space that is truly struggling, but it does keep up with the trend here for Burry purchasing stocks in the retail space. It's not an investment for me, but could very well be a profitable investment if things turn around in general with the economy. But the risk to reward here is just way too high. It's not a business that I have any interest in, so I will not be purchasing this stock either. Good old Boeing made the list here, and this is the first stock that I actually own as well. Burry purchased 60,000 shares of Boeing for a total of $8.95 billion. Boeing is down currently around 68%, but it's the only stock so far that I actually can stand behind and I believe is a good purchase. This is a company in a worldwide duopoly with short-term issues, in my opinion, which has a lot of potential for the future. Unlike most of his retail plays, I don't think that Boeing is actually going to go bankrupt or go anywhere, and the industry as a whole, I believe, will recover over time. So I do approve of this purchase and I am a fan of this company. Maxar Technologies is a company I've never looked into before and honestly never heard of before, but Burry purchased 900,000 shares for a total of $9.6 million. The stock is down over 85% from its peak, and when I first saw the name of the company, I assumed it would be doing well because it is a tech play, but boy was I mistaken, and with performance like this, it concerns me that the future of this business is not that clear. This is also a company that's trading less than a $1 billion market cap, so definitely can continue to see a lot of volatility moving forward. On the plus side, this company is a player in space, and a company like SpaceX could easily purchase them for their technology, so maybe that's why Burry owns this stock and maybe that's what he's banking on. Stock number 10 is good old Facebook, and he bought 60,000 shares with a total value of $10 million. Facebook stock is up almost 60% from the lows in March and has been one of my largest positions in my personal portfolio for a long time. It's another company that I absolutely love. It's a company that I personally own, and I believe the upside potential here, even at current prices, is massive. I like this purchase and I totally agree with it, especially if you got it near the March lows. Now this stock is one that most people know Michael Burry from if you know him from the stock market. He picked up 3 million more shares of Gamestop here for a total value of $10.5 million. The stock is absolutely horrendous. It's down 93% from its highs, and like many other companies on this list, it's, in my opinion, on its way out. It's a business model that's not built to succeed in the new world, and in my opinion, will eventually fold and throw in the towel. It's a very high risk investment, and I won't be touching this stock. And if you really do want to get some exposure to the gaming space, companies like Activision Blizzard or Take-Two, or even indirect plays like Microsoft make more sense. Number 11 is Jack in the Box, and this is an interesting one where he picked up 300,000 shares for a total value of $10.5 million. This stock is down over 40% currently, but had a sharp decline in March when the future of restaurants looked bleak. This is a decent company from a high level view, and an industry that will struggle but can eventually recover back to its prior highs, in my opinion. Now, we've already seen a sharp decline and a good recovery here, and if you bought shares at the lows, he is definitely up nicely on this position. For the restaurant space, I prefer companies like McDonald's, and similar to Jack in the Box, it also had a good opportunity back in March, so I chose to put my money there instead of companies like Wendy's and Jack in the Box. Now, the final stock here that he purchased is a new company to me, and this was the largest purchase that he made recently, with 138,000 shares for a total value of $11.13 million. The stock is down currently 14% and has done decently well holding up during the recent global issues. It's an interesting play in the semiconductor space. However, once again, I would have gone with the leaders here like Applied Materials or Nvidia if you want a strong exposure to semiconductors. Nonetheless, this could be a good investment over time. It's just not one for me in this highly competitive sector. And like I said, there's a lot better companies in this space if you want that exposure. So in summary, here's the full filing of all the purchases that he made. It discloses all of the positions, the shares, and the dollar amounts that were spent on them. The common theme I noticed was that the majority of these stocks were beaten down companies that are still down over 50%, and many of them are companies you would think are on the verge of bankruptcy, like Gamestop or TLRD brands, but Burry sees something in these businesses, so it'll be interesting to see how all of this plays out. From this list, I made it clear that I personally like Facebook and Boeing here, but the others are ones that I'd personally pass up on at this point, as the risk reward is just still too great at these price points, and there are just better opportunities out there in general, so it really makes no sense to me why I would risk my capital in these high risk plays. So I don't know about you, but Michael Burry did surprise me here with some of these purchases. Some of them make sense, and some of them just seem like pure gambles. Maybe he was in it for just a quick turnaround play, a quick recovery. You know, once he has a 10-20% gain on these positions, he sells out. We'll have to find out in the next filing that they do. But in general, I was not a huge fan of the types of businesses that he picked up here. Some of them are great, some of them are okay, and some of them are absolutely horrendous, which I would stay far away from. Let me know in the comment section down below whether you agree or disagree with all these purchases that Burry did, and whether you think that his portfolio will actually perform well, say over the next couple of years, versus the general market. Guys, I'd love to hear your thoughts in the comment section down below, but either way, hope you enjoyed this fun video here. Remember to drop a like if you did, but regardless, don't forget to invest positively, and I'll see you in the next one. Peace.